Are you ready to discover the secret to investing during tough economic times? Welcome to Business Mind. In today's video, we're diving into stocks that have historically outperformed the market in recessions. Before we start, if you're new to our channel, please don't forget to subscribe and hit the notification bell below to notify you on our next Business Mind updates. Number 1, WMT, Walmart Inc., or WMT, is like a champ in tough times for the stock market. In 2020, when things were shaky, it did better than the S&P 500 by 5.1%. And in 2008, during a big economic downturn, it crushed it by outperforming the S&P 500 by a whopping 56.3%. Why does Walmart shine? Well, analysts talk about how Walmart's been fixing up how they do things and their supply chain. They think Walmart's going to make even more money compared to what they're bringing in soon. How? By making their costs lower and using fancy stuff like automation. Plus, they've got some money-making businesses, like ads and helping with deliveries that make them extra cash. This means Walmart isn't just about selling stuff cheap. They're finding clever ways to make more money too. This means when things get rocky in the money world, Walmart's got some tricks up its sleeve to stay ahead of the game. Number 2, ABT, Abbott Laboratories, or ABT, is another star player in the stock market when things get tough. In 2020, when money matters got a bit shaky, Abbott did 9.8% better than the S&P 500. And way back in 2008, during a big financial tumble, it soared high above the S&P 500 by an impressive 33.6%. What's so cool about Abbott? Well, analysts say Abbott's got lots of different healthcare stuff they sell. They're not just about one thing, they've got a bunch of different products. Also, they're super strong with their money game. They've got a solid balance sheet, which means they handle their money really well. These analysts also think Abbott's gonna make even more money in 2024. How? By getting more revenue, especially when they look at their past performance and the fact that they keep giving out more dividends to their investors. That means they're growing and giving back to the people who invest in them. Number 3, SNPS, Synopsys Inc., or SNPS is like a rock star in the stock market, especially when things get a bit rocky. In 2020, when money matters were uncertain, Synopsys smashed the S&P 500 by a whopping 70%. Back in 2008, during a big financial tumble, it still did great by outperforming the S&P 500 by a solid 9.9%. What makes Synopsys so awesome? Well, these guys help make super cool computer chips. You know, the stuff that runs your gadgets? They're the ones behind the scenes making sure those chips work perfectly. And guess what? Everybody wants better and fancier chips. So Synopsys is always in demand. Some experienced analysts say Synopsys is sitting pretty because they're a top dog in their field. People think they're worth a lot compared to what they're selling for, and they're leading the way in making these chips. Also, with technology getting more complicated, Synopsys is the go-to place for making those complex chips, which means they're likely to grow even more. Number 4, ACN Accenture. PLC or ACN is a real champion in the stock market, especially when things are a bit uncertain. In 2020, when money matters were a bit shaky, Accenture did better than the S&P 500 by a solid 7.8%. And in the big financial downturn of 2008, it crushed it by outperforming the S&P 500 by a whopping 29.5%. Why is Accenture so cool? Well, they're like problem solvers for businesses. They help companies with all kinds of stuff, from making plans to using technology smarter. What's amazing is that they're not just good at one thing. They do lots of different jobs. Plus, they're really good at making more money compared to others in their field. They've got a super strong financial record and handle their money really well. Analysts say that Accenture is like a shield during tough money times. They mean that when things get uncertain in the economy, Accenture is a safe bet for investors. Their diverse services, excellent earnings, and how they handle their money make them a smart choice, even when things are a bit shaky in the money world. Are you here for financial success? The path to it is full of challenges. But don't worry, Business Mind is here to help you dream big and achieve bigger. Check the links below and who knows, your success might just be one click away. Number 5. TMUS T-Mobile. US Incorporated, or TMUS, is like a superstar in the stock market, especially when things are tough. In 2020, when money matters were a bit uncertain, T-Mobile did way better than the S&P 500 by a massive 55.7%. And back in 2008, during a big financial dip, it still soared high above the S&P 500 by a solid 14.8%. Why is T-Mobile such a big deal? Well, they're in the phone business, and they've been growing really steadily, even when it's tough in the world of phones and gadgets. They're also planning to grab more customers from their rivals, like Verizon and AT&T. Plus, after joining forces with Sprint, they've got even more cash coming in that they can use freely. Analysts think that T-Mobile is a top-notch investment. Their steady growth in a tricky industry, their plans to snatch more customers from the big players, and the extra cash they've got after merging with Sprint make them a really attractive choice for folks who want to invest in stocks. Seems like T-Mobile's got some serious mojo to keep on rocking the stock market. Number 6. DIS. The Walt Disney Company, or DIS, is like a superhero in the stock world, especially when things get a bit tricky. In 2020, when money matters were a bit uncertain, Disney did better than the S&P 500 by a solid 9%. And back in 2008, during a big financial tumble, it still soared above the S&P 500 by a strong 8.8%. What's so awesome about Disney? Well, they're not just about one thing. They've got their fingers in lots of entertainment pies. From theme parks that bring joy to people, to streaming services that show cool movies and shows, and even TV networks, Disney's got it all. What's even cooler is that no matter how the economy is doing, people still love Disney's stuff. During the pandemic, Disney Plus got super popular. Lots more people signed up to watch their favorite movies and shows from home. This shows that Disney's entertainment is always in demand, no matter what's going on in the money world. Number 7, NFLX. Netflix Incorporated, or NFLX, is a real champ in the stock world, even when things get a bit tough. In 2020, when money matters were wobbly, Netflix did way better than the S&P 500 by a huge 50.9%. And way back in 2008, during a big financial drop, it still rocked above the S&P 500 by a strong 50.8%. What's so cool about Netflix? Well, they're all about movies and TV shows that you can watch on the internet. Even though it seems like something you don't really need when money's tight, Netflix did really well during hard times. How come? Because it's not super expensive compared to other fun stuff you can do, like going to the movies or getting cable TV. Plus, lots of folks are changing the way they watch shows. They're moving away from regular TV to streaming platforms like Netflix. So even when people have to be careful with their money, they still want to chill and watch good stuff. That's where Netflix comes in. They're not super pricey, and they're right there when you want to relax and watch something fun. That's why, when it comes to entertainment, Netflix is a winner in the stock market, making people and investors happy with their shows and their stocks. Now, are you ready to dive deeper into these incredible stock market superheroes? Join Business Mind, where big dreams become even bigger achievements. Don't forget to like, share, subscribe, and hit the notification bell below for more empowering content to elevate your business journey. Dream big, work hard, and see success beyond your expectations. Thank you for watching, and see you next time. Business Mind, signing off.